Morning, Steve Free in Chicago with the morning grain comments. Well, we have a strange event today here in Chicago. The sun's out. So we are looking at a few more days of sunshine. Temperature's actually warm early next week, and then rains come back. So we'll just kind of take that as it goes. Yesterday was a big day for the markets. I think the Feds came out and kind of opened up the door for a possible rate increase. Alan Bush still does not think they'll increase it in June. But the markets reacted to it. You saw the bonds break, you saw the stock market break, and you saw crude oil break off its highs, and most commodities overnight are lower. Chinese stocks are lower, Chinese commodities are sharply lower, and we've kind of filtered that into the grain markets. Thursday is export sales day, and we'll be watching to see from a corn sales standpoint, do we do another 1 million tons? Beans, old crop could be 300,000 to 500,000 tons. We'll be watching the new oil sales. It could be bigger than what we've seen in a while. And as far as wheat sales, still probably disappointing in the 200,000 to 400,000 ton area. More reports coming out of Brazil that they may have a lower corn crop, and that might help our corn export demand. We've also seen ethanol margins improve with a little pickup in ethanol exports, and China is buying some DDGs, and on the board, soybean crush margins are over $1. And so the farmers sold a lot of beans to the crushers, and these are good crush margins, and we should be picking up that crush rate. We also note that we are competitive for meal demand because of what's going on in Argentina, and that could help crush margins also. We also note that the short-term U.S. East Midwest weather forecast is warmer and drier. That should help plantings there. The Argentina farmer is not selling as much beans as what the market is hoping for, and they could export only 8.5 million tons of beans this year versus the USDA's guess of 11.4. We've been waiting for the China to announce their corn reserve policy. Could be as soon as today, so we'll kind of watch that pretty closely. The funds yesterday, sellers of 6,000 beans, 4,000 oil, 3,000 wheat. They bought 5,000 meal and 9,000 corn. And one of the closely watched private analysts comes out with their monthly price forecast. They're looking for December corn futures in the OND time frame to drop to $3. Looking for the soybeans to hover around $10 and then gradually in 2017 work lower. Chicago wheat probably will find a low around $4.60. Next year averaging about $5, which is below where the July contract for 17 is. So I guess what they think it's going to rain this summer. As always, these are my thoughts and not those of ADM or ADM Investor Services. And have a safe and profitable trading day.